Hi, I'm James Baker, founder of James Baker and Associates and international tax expert slash entrepreneur. And this clip you're about to see is from our last Ask Me Anything. If you want to ask me some questions, I come on live Wednesdays and Thursdays as much as I can. You can join with the link in the description below. I'd love to see you there, but let's get to the clip.
And the next question is more important and something that I can comment with much more certainty on. When do U.S. estate taxes apply for U.S. non-residents? So if you don't, if you're a non-resident, you live in whatever country in the world outside of the U.S., estate taxes in the U.S. only apply for U.S. source assets. And the most common occurrence of these assets are U.S. real estate investments and U.S. brokerage accounts with U.S. stocks, U.S. companies. So, and I do the estate tax forms and I help advise clients on this constantly. But if you are, what happens is people were in the U.S. for 10 years, they got stock options and they just left them in the brokerage account. 30 years later, they die, the stock is worth a lot. And now the family's trying to get access to it. And the brokerage account won't give them access to it until they show they paid the estate taxes. And the same with real estate. The title company, if you still have a mortgage, the mortgage company and the title company won't deed over the property to the owners, to the family members, to next of kin or whoever, until they have proof that the estate taxes were filed. These are the main instances where you need to really be prepared and set this up the right way, because this could all be easily avoided if you set up the investments the right way initially. So in these instances, the estate tax exemption for a non-resident on his U.S. assets is only $60,000. So if your uncle has a brokerage account with $1,060,000 in it, in order for you to get access to those stocks and that money, you need to show the brokers that you've paid taxes on the $400,000 tax bill. It's basically 40% on the amount over 60,000. So you need to show you pay that. You can file the forms and then have the brokers write the check out of the assets in the account. That can be done. It's tedious and it's annoying, but it's a serious thing. So if you have stock options, you have U.S. real estate in your name, or especially with a loan that's in your name or in a single member LLC, it's not protected from estate taxes. And if you die, your family is going to have to call me and pay the U.S. government to fix it. So it's much better to pay me much less now and get it set up the right way and then pay the U.S. government never. So that's what I'm talking about in this instance. So I think I answered that question pretty well. U.S. estate taxes apply for non-residents when you have U.S. source assets, most commonly U.S. real estate, U.S. stock of publicly traded companies and U.S. stock exchange from a U.S. brokerage account. If it's not a U.S. brokerage account, it's a little bit different. If the custodian, if you have U.S. stocks inside of a Spain brokerage account, I don't think it's the same. I think it's based on the source of the custody account.